Hello, all of you. Welcome to a little bit of revision of yesterday's class. What we did was different aspects of tax planning. It is over, but little bit whatever is revision and once again repetition is required. The gist one we will do, and then we are starting with the ICDS. ICDS, how to study and how it is important, how they are asking the questions in the exam. With that emphasis, we will take it. First, you all say, do you have any doubts in yesterday's class? Did you understand with lot of examples how these are the different aspects of tax planning? Hmm? Tax planning is within the framework of the Income Tax Act. You know all the provisions of Act and you plan it. The best example is I have money 50 lakhs, still I'm taking housing loan and buying the property. So that interest is deductible from income from house property, principal is deductible in ATC, as rent is coming, EMI is paying, and over the year the property is free. Today I was taking in inter classes PPF. There also a small tax planning which I covered and I'm discussing with all of you is, now my son is major, but till he was minor, I was putting PPF for him. You all know we can put PPF for self, spouse, and children. So I was putting PPF for my minor son and I took deduction. Okay. Now I want to put money in my PPF. Once you have the PPF account, minimum at least 500,000 rupees and maximum 1,50,000 you have to pay. But 150 I have already paid in my son's account. Now if I want to pay in my account, PPF I can pay, but I will not get ATC deduction more than 1,50,000. So I asked my father to pay in my account. Can a father pay? We can pay PPF for self, spouse, and children. Children includes married daughters also. So can my father pay in my PPF account? Answer is yes. And who will get the deduction? My father will get it. So like this is just one example or aspect. Tax planning is taking the best benefits of tax laws and paying least tax within the framework of Income Tax Act. That's what is tax planning. Then we have seen is tax management. Tax management is nothing but compliance, administration of taxation laws, paying TDS, TCS, challans, payments, returns, monthly returns, and some forms, and yearly return, whatever it is. So complying with all the requirements of Income Tax Act is tax management. Timely you have to deduct the tax and pay, give the certificate and all that. So tax management is like inbuilt in the act. By this date you have to pay 30%, 45%, 75% tax and so on. Then we have seen the next aspect is tax evasion. Tax evasion is outrightly doing the things wrong. It's as good as three important reasons. Why do the cases generally go for scrutiny? When they know that income is suppressed, expenses have been overshown, losses have been overshown, and if they have doubt, then they may call your books of accounts for scrutiny. Like that, tax evasion is suppressing your income, suppressing your sales. Any 5 heads of income, you are getting rental 25,000 per month, but by check you take 15 and 10 you take cash, which you don't want to show. So like this, when you're suppressing income, you're trying to put ghost expenses, salaries, and this and that, fake expenses. Even though you have full bill for the fake expenses, even though you have paid by check and all the claim you have done. But if it is proof that it is fake expenses, you have purchased a stationery from your friend and your friend is dealing into stationery, he gives you a bill, you make him check payment, he puts in bank, withdraws cash and give it to you. Actually, you have not purchased any stationery. No stationery is seen physically when you do. That's why we do stock taking and all for the stock. That book stock and the physical stock should tally. So tax evasion is outrightly suppressing your income and so paying less tax. If it is caught up, generally it is in the form of survey rate and all. And then you need to pay tax, penalty, interest, fees, everything. Okay. Tax avoidance is tricky part. Tax avoidance is you are trying to evade the tax, but within the four corners of the law. Means within the act only, if there are some loopholes, you are trying to bend it and take the benefit. Like, yes, we did say if you are having AC, two-wheeler, four-wheeler, plant and machinery for your business, you can claim 15% depreciation. Okay. So now if you are installing the AC at your home, two-wheeler you have purchased for your son, laptop you have purchased for your spouse, and you are showing the bill in the form, claiming the GST, claiming the depreciation repairs, then what is this? This is tax evasion. Huh? You're trying to avoid the tax, not evasion, sorry, tax avoidance. This is tax avoidance, not evasion. You're not doing outrightly wrong, but you are trying to evade the tax, and on the top of it, everything is like correct only. It's looking very correct. Huh? So this is how it happens. And so like this different examples, I think I need not repeat, we have done yesterday. If you have any doubt, put it in the chat box, otherwise I'll just scroll up and check with all of you. If you have any doubt, you can ask. This part is just for your reading, just read it for once, dear students. Doctrine of form and substance in the tax planning, just read it. There are a lot of examples based on case laws. Case laws, it's okay, whatever best you remember. And I had talked recently with so many students. Our students, Santoshini, Pravalika, those who cleared, Satya Prakash, they cleared the CMA final in the last attempt, which was online exam. And in the CMA exam, and we recently they've not been asking exactly the case laws quoting and all. Wherever it is required, we will discuss it, no problem. But examples should be clear to you. So these are just examples which we have discussed yesterday. Form of transaction is to be considered in case of genuine transaction, substance over the form. Legal form may show something, but if it is clear, no, so and so person is owner, but this is the major beneficiary and income is diverted and all that, then in that case, you have to check the relevance. That's what it is. Read it once at home. Then what is tax evasion? It is illegal way to reduce the tax liability. Increasing expenses. That's what I told you. Tax avoidance is exercise by which legally we are taking the benefit of the loopholes of the act. Okay, you said above 10,000 I cannot make cash payment. No, I will make 8,000 payment today, 5,000 tomorrow, 13,000. Actually, I have paid 13,000 at a time. But I asked him to sign on 2 vouchers, thumb impression dalo, sign karo, leke jao paise. So people are doing this. That is what is tax evasion. Okay. Then tax planning. Why do you do the tax planning? Obviously to reduce your tax liability, to avoid litigation. Productive investment. When you plan your tax properly, people are literally doing LIC and PPF investment so that they get ATC's benefit. They put money in the Mediclaim. Health is so protected, but they get ATD benefit. So these deductions are like productive investments. Good, no? You're encouraging to put the money in PPF, and by simply putting 100 rupees in PPF, like today my own account. 40 years back it was opened when I was minor. Right now it is having lakhs of rupees. And PPF account is like every 5 years now I need to renew. But PPF interest is exempt. So now I'm getting so much of interest in my PPF account that every year's contribution ke jitna to I'm getting interest only. Are you getting? So it is, whenever you do tax planning, it is productive investment. When people, 2, 3 people who stay in a group in a house and they purchase the house in common, they are getting rental income. They are salaried people, actually, but very good friends and colleagues. Together they buy property, they put it on rent, they get the rentals and they pay EMI. Over the period, rental aa raha, EMI ja raha, and over 10, 12 years now they are the co-owners of the property. So this is what is tax planning. It will lead to healthy growth of the economy. Okay. When proper tax planning is allowed, why people would like to pay less tax? Up to 5 lakhs income, when we know that rebate is allowed under section 87A, then small people, why would they try to suppress their income? If your income is 4.5, 4.8, don't worry, you're getting that benefit. So like this, just read it. What are the objectives, or objectives are sometimes out of the way. If they ask you in exam, write down over here, advantages of tax planning. Okay? Right. So this is all. And from here, we have done types of tax planning. Short range tax planning is every year put the money in PPF, NSE and all that. And permissive tax planning is okay. Within that same permissive is, suppose you sell one property, you buy one property, you sell land and building, you buy 54 EC bonds. Purposive tax planning is allowed, but in depth, I'm planning it. I'm into teaching. I get all my professional income. Now, if I want to do share trading, can I do it in my son's name? He's just now 19 years old, 19, 20, so hardly having any income. So share trading is a good beginning. I'm doing that, but in his name. Property, if I want to purchase, let me purchase in my mother-in-law's name. She'll be getting rental income, and then through will it will come to us. Like, so these are all different areas of tax planning. While tax planning, you need to check the structure of the organization, whether it is individual HUF, what are the taxes applicable, locational aspect, SEZ and all we have seen. What is the kind of nature of business? Like NRI doing all these business, he will definitely go for presumptive taxation. 80 lakhs turnover. Now I want to do business. I want to grow my business. Can I just pay on 80 lakhs 8% as net profit and no need to maintain books of accounts and all? So like this, you can plan. Okay. So this is all regarding what we have done. FMC related, we have discussed what are the benefits of equity. And then we have solved questions also. I feel from my side, this topic I have justified. More questions anywhere you come across and you want to practice with me, bring it to class. At the end of your syllabus, there are all chapters MCQs also. So whatever chapters we are completing, you can start solving that also. They are very easy. I've gone through. You do it on your own. If you have any doubt, ask me. Yeah. I'm taking a pause 2 minutes so that unmute and speak up, put it in chat, and if all clear, then let us begin with the first class for ICDS. Ready? All right. Okay. ICDS, we are beginning now. ICDS, what is the full form? Income Computation Disclosure Standards. Now, as we have accounting standards, yes or no? At inter-level in accounts, we study accounting standards which are mandatory for the companies, level 1, level 2, level 3 companies. In final, in FR, you all are studying INDAS, Indian Accounting Standards. Tell me one thing, have you all completed your INDAS? Then you would respond well for the ICDS. ICDS also I will teach selective. Selective means I will not leave anything. But let me tell you, in inter, the way they ask questions from ICDS is write a short note on ICDS 3, write a short note on ICDS 10. Like that, they are asking the question. In final, sometimes problems are being asked which are very easy. We are going to solve problems tomorrow, not today. Second thing is, in ICDS, they are asking comparative between INDAS and ICDS. What is the treatment of this item in INDAS? What is the treatment of this item in ICDS? That's what is the expected question in final exam, and according to that only I have given my notes. And little bit if I teach extra, I feel it will be helpful to you for your INDAS. And INDAS is almost the advanced part of the accounting standards. In India, accounting standards are like applicable for up to a limit organizations, but Indian accounting standards are mandatory for all the corporates above the net worth and all that. मुझे FR नहीं पढ़ाना है आपको. But tell me in the chat box, at least, do you have idea or not? Accounting standards are the benchmark that all the people are maintaining the accounts in uniform way, so that you can compare your own accounts with your past years, because every year you have been charging depreciation WDV, you have been valuing closing stock FIFO method. Like this, accounting standards are mandatory to maintain the books of accounts. That way, you all know essays also. Yes or no? What are essays? Standards on auditing. Standards on auditing are when you do the audit, you need to follow auditing standards so that all the people are doing it with the same quality level. So essays are to be followed by auditors. AS is to be followed by companies for maintaining books of accounts. Now coming 10 minutes, dear students, pay attention. I am discussing your page number 1 and these points are asked in MCQs. Each bullet point is very, very important. I'm not starting with ICDs. When I start with ICDs, how to read it, how to remember it, how to ignore few points. ऐसे strainer में छान के ही हम पढ़ेंगे, because if you try to mug up everything in ICDS, only ICDS I can teach for 7 classes. Like combine it with accounting standards, but not required. Okay. First page, what I am discussing is very, very important, dear students, for MCQs question. For sure, out of these bullet points only, you will get one MCQ at least. I told you, no, they are not checking how to make the paper tough, ki kaise hum unko test kare. When the paper is being said, they are checking how in-depth you know. So, as we have standards or benchmark for maintaining the books of accounts, we have standards and benchmarks for auditing, for uniformity, for comparatives and all. Like that, ICDS, the full form is Income Computation and Disclosure Standards, are standards to help us compute our income in a proper way. But which income, ma'am? We have income from 5 heads. Now, ICDS is applicable only to compute income from business head and income from other sources. In fact, rather than reading from here, I want to take it here. Just look at this. There are 10 ICDS in your syllabus. ICDS are applicable only for computing business income and income from other sources. Are you all with me? That too, they are applicable only for business. Now, why so? Salary income is taxable on due or receipt, whichever is earlier. House property to story alag hai. Notional income is taxable. Fair rent, municipal value, whichever is lower, this and that, whichever is higher and all. Huh? And capital gain comes when you actually sell the asset, sale consideration. So those 3 heads, ICDS is not applicable. ICDS is not applicable for salary, for income from house property, and for capital gain. Not applicable. It's applicable only for business income and income from other sources. Because business income you derive regularly from your P&L account, add less karke, income from other sources also. Sometimes you are having like rental income of plant and machinery, interest on loan and so on. Now, ICDS are applicable. They are applicable. Nothing to write. All these are there just to fit into your mind. I'm writing. Applicable for computation. Are you all with me? Clear? ICDS are applicable for computing the income. It has got nothing to do with books of accounts. Ma'am, for books of accounts also, do we need to follow? No, for books of accounts, you have accounting standards, India. Keep following them. FR. Only for computing the income and filing your return for business head and income from other sources, you follow ICDs. I don't know what you do in books, but income tax may, for closing stock, no, value it at cost or so, like in P&L account, in the business head P&L account, they'll give you 2-3 adjustments related to ICDS. Someone was asking me yesterday, ICDS is applicable to MAT. It's not. I'll clear that little later, but abhi ye part clear hai. ICDS has got nothing to do how you maintain your books of accounts. It's important only to follow ICDS while computing your business income and income from other sources. Done. Clear? Now, ICDS is applicable only if you follow mercantile system of accounting. Now, when I say system of accounting, pop up section 145. 145 is popping up. And what does 145 says? It says method of accounting, what you follow. 145 subsection 1. 145 subsection 2 is talking about ICDS. But 145.1 says you can either follow cash system or you can follow mercantile system. You cannot follow hybrid method. If you are following cash system, you record income only when you receive. Right or not? But in mercantile system, you record income on due basis. So if you are following mercantile system, ICDS is applicable. So the gist of all the 3 points is ICDS is applicable if you maintain books of accounts with mercantile system, that too only for computing your business income and income from other sources. Clear to all of you, these 3 points? Now, when I'm talking about MAT is our next topic, minimum alternative tax. Here, one thing should be clear. MAT has got nothing to do with your business income, your book profits and all. MAT may you take the profit as per your books of accounts. MAT may you take the profit as per your books of accounts. And in books of accounts, you do plus and minus to get the profits at which 18.5% is the minimum tax you are liable to pay. And ICDS को books of accounts से तो कोई लेना देना ही नहीं है. So for MAT, ICDS is not applicable. Can they ask you 1 mark commenting question, and will you attempt it with your logic? When I do MAT, it will be clear. In MAT, I don't have anything to do with what I taught you in business head, add and less. No. MAT, we start with the books profit. Net profit as per P&L in the books. And we do add and less. And ICDS has got nothing to do with the books. Only computing the income. So for MAT purpose, ICDS is not applicable. Next, dear students, did we do AMT? Did we do AMT? Yes or no? What is the full form of AMT? पढ़ाया कुछ दीप्ति मैम ने आपको AMT? One full class we did. क्या पढ़ा?
Alternative minimum tax.
Very good. Applicable to all other than companies. Yes. AMT is alternative minimum tax applicable to all other than companies. When you are taking 35AD deduction, when you are taking section 10AA deductions, and when you are taking that some other 80I series deductions, then add back those deduction, you get adjusted total income. On that 18.5% is the minimum tax. And in case of IFSC and all 9%. It's not something very boosting. दीप्ति मैम को तो सब याद है. दीप्ति मैम ना बहुत साल से पढ़ा रहे हैं, रिपीटेशन हो रहा है, इसीलिए याद है. If you don't remember, absolutely okay. But if you want to link up the subject and score super marks in your exam, as soon as you see AMT, if you remember, fine. If not, turn back the pages in your material, check and come back. Check and come back. This will happen in income tax now. You will do superly well, I'm telling you. It's income tax na, ऐसे कोई square rectangle नहीं है. It's like in circle. I was teaching salary chapter abhi, and there they had ATC deductions. Now where are the deductions and where is the salary chapter? So it's like everything in circle, circle, circle. So when I'm saying that for AMT, ICDS is applicable. Ma'am, how come? Because in AMT, we don't deal with the book profit. We take profit as per Income Tax Act, business head income. What you have computed, business head income, what you computed, we add back those three deductions, section 10 exemption, 35D and all, and then we pay 18.5% and then we compare. So in AMT, we are talking about business profit as per income tax, right? And so ICDS are applicable while computing AMT. Like for example, you are doing AMT for say individual, Mr. R. But Mr. R has received some subsidy, some grant. Now for grant, we have ICDS. In accounts, they say grant you should recognize when condition is fulfilled. ICDS is saying grant milana, take it in income. So like this, while computing AMT, shall we apply ICDS? Answer is yes. I'm telling you lot of analysis and reasoning. That's why I said pay attention to these first 15 minutes carefully, because when you justify like this, now you will be clear. So ICDS is applicable only to compute two heads of income. Why not other three? I have justified. ICDS has got nothing to do with how you maintain your books of accounts. AS, Ind AS are there to take care. They just are bothered about how you compute your income. ICDS is applicable only if you that is follow cash system and mercantile system of accounting. Okay, right? Now, you cannot follow hybrid system of accounting. That is surely given in section 145.1. Now, ICDS is not applicable to MAT because MAT goes with books of accounts and ICDS and books of accounts are not best friends. ICDS is applicable to AMT because AMT follows your business income computation. That is ICDS. Okay, right? So if these points are clear, now in accounting standards, how do we study every accounting standards, dear students? I will little bit be going for coming 2-3 classes. ICDS अच्छे से पढ़ने के लिए, because they are asking questions also in the exam for 5 marks, comparative. Sometimes not required, like some ICDS are very easy, plant and machinery there and here no change. I will also go little fast, but where required, I will go back little slow so that comparative mind is clear. When I say we study accounting standards, we start with title. Title of accounting standard 1, disclosure of accounting policy, valuation of inventory, AS 10, property plant equipment, AS 12, government grant. So that is title. Then we have definitions in every AS, that this is applicable to whom. Then we have specific treatment of that AS, that okay, this is it, treat it like this. ऐसा है तो ऐसे करो and all. So title, definition, treatment. Title, definition, treatment. Then what? Last is disclosure. Accounting standards, what you are following? Are you following SLM method, WDV? How you are valuing your closing stock? Oh, yours is a construction business. How much percentage is completed? What about the escalation clause income? So see, one disclosure word is so beautiful in accounts, income tax, all, because we are the insiders of the company. We are day-to-day managers. We know. But then there are so many outsiders who are having an eye on the financial statements of our company. The shareholders, owners, investors, debenture holders, government, datas, creditors, future stakeholders, so many people. So they should also be able to analyze the things from the balance sheet. That's why disclosure. Now coming to ICDS. ICDS, how do you study? Same. Title of ICDS is, I'll tell you, it's all copied from your Ind AS only, ICDS. Then ICDS is also talking about definitions. ICDS is also talking about treatment. ICDS is also, ma'am, pura yes to padha rahe hain aap. In additionally, comparative difference. What is the treatment of this item in Ind AS? Like I told you, grant in Ind AS, you recognize grant in Indes, you recognize when that conditions related to grant are fulfilled. Whereas ICDS says grant mil gaya na, take it in income. This reminds me, I have sold my house to you. Okay. I have sold my house to Sandeep and I took token money. Listen to this example, 50,000. This is capital gain, but ye relevant hai. I have sold my house to Sandeep and he gave me token amount 50,000 by check. And remaining, chalo, let us take 2 months to do paperwork. Now, within 15 days, he got his relatives and all to see the house which he is going to buy and all. And he said, ma'am, this house is not good for me for Astro Vastu. You know, nowadays, not Vastu, not Astro, it's Astro Vastu. They're saying, not good, ma'am. I won't be buying this back. I said, okay, the property deal is cancelled. This advance money I will forfeit. ये कहीं ना कहीं this question comes in exam. Advance money which I have received, no, I want to forfeit. Forfeit means I'm not going to return you, Sandeep, because the day you came and saw the property, 10 more people came. I gave paper ad. I lost all my customers. Again, I'll have to do everything. So this token money, I'm not going to return it to you. Is it my income? Is it my income? Answer is yes. Where is it? It's taxable. Genuinely, it is related to capital gain, related to property. But now I have not sold the property. Section 45 chargeability section of capital gain. Knock, knock. Enter only if you sell the transfer the capital asset. Have I transferred capital asset? No. Deal with Sandeep is closed. 50,000 will straight be taxable in income from other sources. ICDS. Income from, you got the money, tax it. Earlier, what used to happen, this 50,000 income I am enjoying, but I was not paying tax. After 3-4 years, again I have sold the same property to Manogna. That time, what was my cost of acquisition? I would reduce advance money and all story. Now I don't want to teach how to calculate because from 2014 onwards, they say advance money is forfeited, Dipti ma'am. Yeah. You are keeping it with you, 50,000. Yeah. Show it in income from other sources. Oh, your house is compulsory taken by government 3 years back and you fight it and you got enhanced compensation, capital gain. Acha, you got interest on the enhanced compensation, income from others. So the things are very clear now because of these 10 ICDs. This income, basically I'm telling you, when you compare INDS and ICDS, the only thing new you will learn in these coming 2-3 classes, whatever, I don't know what is your response and my speed. I never dictate that I will finish this chapter in 2 class and 3 class. It's upon you how you want to learn, and definitely from my side, little bit extra I want to give because anyhow India's bhi padhna hai aapko. So if you do it in comparative way, it will be easy. And once you complete India's thoroughly, watch this 2-3 videos again. So whenever you are starting now with ICDS 1 and all, make sure you stress a lot on comparatives about the timings of taxation. In days ke hisab se when this is going to be taxable, and according to ICDS when this is going to be taxable. Am I clear with all the points? I'm going and reading now from the book, but anyone is having any doubt for applicability? Yeah, ma'am, you are saying ICDS are also disclosed. Where they will be disclosed? In return of income, in your 3CD report. One clause will be there. You all know 3CD में पूरे clauses रहते हैं ना, unreasonable payment, any advertisement in political, ऐसे पूरे all disallowed वाले. So there you will having the disclosure requirements as per the ICDS. Okay. So here we finish with the basics of the ICDS. From this you can expect a lot of MCQs and make these 2 sections your best friend. What is section 145? In between the assessment procedure also I taught these 2 sections. If you want, go and check in your material. 144 we did best judgment. 147 we did income escaping. In between these 2 I have just discussed. 145 1 says in your business head you can maintain the books as per mercantile system or cash system. And 145.2, what are the cases when ICDS are applicable? If they are applicable, what is definition, what is treatment, what is disclosure, and comparatives. Ask your doubts. Is everything clear until now? Chalo. Let us now go to reading this. In exercise of the power conferred under 145.2, central government has notified the ICDs from 2016 onwards. The standards are required to be followed. Oh, I missed explaining the first point only. It is applicable to whom? ICDs are applicable to all the SSEs, but to individual and HUF, ICDs are applicable only if books of accounts are audited under 44AB. If their turnover exceeds 1 crore, books of accounts are audited. And then for individual and HUF, like TDS provisions. Exactly same point is discussed in TDS. TDS provisions are applicable to all the SSEs. But for individual and HUF, TDS provisions are applicable if whoever is the payer, his books of accounts are audited. Is the first point clear? Next. Who follows the mercantile system of accounting? उनको ही ICDS applicable है. For the purpose of computation of income chargeable to income tax under that profits and gains or income from other source. The standards are not for the purpose of maintaining the books. These ICDS or standards are just for computing the income. Chalo. Next point is super. In case of conflict between the provisions of Act and ICDS, what will prevail? Provisions. Head of the family is father. ICDS are small children's, upcoming children's now. Yet minors born in 2016. So if there is a conflict, ma'am, Income Tax Act is clearly saying, okay, do this. And ICDS is saying do this. Which one you will follow? Income Tax Act. I have not written here, but same applies to rules. Can you please add on here? Rules may or ICDS may, if there is income tax rules are there, no? Like 44A says maintain the books. Then we have rule 6BB. Okay, 6DD and all those rules. Kaise maintain karna hai kya? So if there's a conflict between rules and ICDS, rules will prevail. Clear to all of you? Justified or not? Just don't go on ticking without understanding. ICDS are applicable for presumptive taxation. Super. Presumptive taxation, what do? You take the turnover and on that some percentage you pay, show as net profit and pay the tax. And you are free. No need to maintain books of accounts. No need to get it audited and all. So 44 AD is for presumptive taxation for business. ADA for professionals. 44A less than 10 vehicles you are having. So like these, all these presumptive taxations are applicable. For them is ICADS applicable? Yes, because presumptive taxation is also, it's like computing the income as per your business head, no? So for that ICDS is applicable. ICDS is not applicable for MAT. MAT is computed on the basis of book profit as per the Companies Act. You don't start only with the profit as per Income Tax Act. You start with the profit as per books. Whereas ICDS is for income tax. Hence, ICDS is not applicable to MAT. AMT under 115 JC is computation of adjusted total income by making adjustment as per the provisions of enhanced. ICDS is applicable for AMT. Because in AMT, you consider your business income. You add back if you have taken section 10 AA, if you have taken 35 AD, if you have taken ATI, add back. What you get adjusted total income. Uska 18.5%. So you are taking business income, hence applicable. I want all of you to add one point here in your material. And if you're not having this material, then write it in your notebook. ICDS are disclosed in return of income in tax audit report, in return of income, in tax audit report, form 3CD. Tax audit report form 3CD. Write down, add it on this one. All clear? How they will frame the MCQ. ICDS is applicable for business head, for mercantile, for cash, for hybrid. Out of that, you have to take one. Very scoring, I'm telling you. Now, names of 10 ICDS. AS and INDS I have just given for reference. Ma'am, do we have to learn this table? Answer is no. AS and INDS you are doing already in other subjects, but this is just to link up I have given for reference. ICDS there are 10. What is ICDS 1? Accounting policy. Same we have AS1, disclosure of accounting policies. ICDS 2 is valuation of inventories. Same we have here. ICDS 3, there it is cash flow statement. Now sequence garbad ho gaya. Here it is construction contract. 7. ICDS, accounting standards are my favorite out of the way I'm saying. And I've been teaching accounts also since years, and I got 95 in accounts in CA Inter. I was topper. So it's like, एकदम ऐसे crux है, all the accounting standards, amalgamation, internal reconstruction. It is like this. So very clear that when we say 1 to AS3 is like cash flow statement. So like this, that sequence is clear, but let us just link what is required only for ICDS. ICDS 4 is 3 is construction contract, which is like AS7. Compulsory, I feel, पता नहीं, मैं actually teacher नहीं हूँ FR की and all, so it would be wrong. But I feel ICDS like construction contract, they do ask question. How to compute and how you are showing the percentage and all. ICDS 4 is revenue recognition. Okay, right. So ICDS 4 is revenue recognition, and that is like AS 9. ICDS 5 is tangible fixed assets, and that is like AS 10. This is the only one very easy for all of you. No much change between the ICDS and the AS. ICDS 6 is effects of change in foreign exchange, your AS 11. ICDS 7 is government grant. ICDS 8 is securities, nothing but accounting for investments, come interest, ex interest, right shares, bonus shares, all that. ICDS 9 is borrowing cost. सबसे छोटा वाला accounting standard is this, qualifying asset and all. And ICDS 10 is contingent asset, which is AS 29. The name is contingent asset, but contingent liability, provisions, all it is talking. Okay, right. Great, Sandeep. It is to be shared with everyone that you have got 82 in FR. So you have got exemption. Is it in group 1? Now you should aim for exemption in income tax and clear your group 1, right? Great to know that. Chalo. I wrote 1 by 1 group 1. That I should not take wrong credit. I got 95 marks in accounts, but I wrote group 1 separate and group 2 separate. Group 2 also I got first attempt only I cleared, and in income tax also I got exemption that time, but I always wrote 1 group. I never wrote 2 groups. Chalo, shall we start now with ICDS? Few ICDS are very simple and little bit you call it spoon feeding or whatever it is. I am giving every ICDS first the concept is required, because if I directly start comparative, for comparative concept is required. Actually in your inter exam write a short note on ICDS ना, तो ये इतना है ICDS 1. ICDS 1, like I'll be giving you the gist of the ICDS so that you have a base level idea. And in comparative, please don't misuse that I've given things in bold. The points which are important and conflicting, that's what is important. No, कि income tax में when you compute business head, You need to take care of these points. But it's not कि ये पढ़ना ही नहीं है. हाँ, please don't misuse. And if you feel so, be honest, मैम, कि ये bold को भी normal कर दो अगले बार से, I will do it. Because you cannot predict professional exam. So you need to have an overview, and then with lot of stress study those points on which you are expecting a question in exam. Huh? When we solve questions for ICDS, now you will enjoy. It will be so simple because all these highlights will be clear to all of you. Okay? Chalo. Right. So let us begin with your ICDS 1, and that is your accounting policies. Exactly same what is your AS1 disclosure of accounting policies. Okay? Accounting policies, what you follow, and you need to follow it consistently and all. Okay? But in income tax, they are saying mark to market loss or expected loss should not be recognized unless recognition of loss is in accordance with the provisions of any other ICDS. Mark to market losses, I want all of you to write here, prudence principle. Are we following fundamental accounting assumptions all? Going concern, consistency, accrual, yes. But ICDS is saying prudence principle NA, not applicable. What is prudence principle? You should provide for all the foreseeable losses. Books of accounts is, like narrow-minded, dara person. I literally call it like this. Who? Books of accounts. No, better make a provision for repairs. Better make a provision for doubtful debts. Provision for this, provision for that. If you have little doubt and if you can foresee in future you are going to have losses, now only you provide. You will remember in construction contract, irrespective of construction is started or not, if you feel that future you are going to incur loss, whole loss you put it now. Income Tax Act says no. Probable losses, don't put it in the P&L account. See, just imagine your Income Tax Act P&L. Do you debit any provision? Provision for expected loss on sale. I am, planning to sell this asset on OLX. March May it is not sold, but even if it is sold in April, right now the WDV is 10. I'm very sure it will not be sold more than 7. So account says 3 rupees loss abhi book kar do. If I go in depth, no, this 3 rupees is called as impairment of asset. And book it now. Who is saying? Accounting standard. You are very sure. You have not sold, but you are sure. Kitna scrap it is, it's not going to be sold more than 7 rupees. Income tax says no. Don't recognize because this is like fictitious loss. Losses due to embezzlement are also allowed under business act, provided it is actual loss. Your cash is stolen by the cashier. Okay. So mark to market loss or expected loss shall not be recognized. Can I ask all of you to please do 3D, 5D makeup of your book as and how I am doing? Like this language is important. Fundamental accounting assumptions are same. Change in accounting policy. Okay. In accounts, when do you change accounting policy? For better presentation, when it is required by other accounting standards and so on. In income tax, they say change the accounting policies, SLM, WDV, FIFO, weighted average, only when there is a reasonable cause. Now, reasonable cause is not defined, but it says when it is actually needed. Disclosure of accounting policies. All significant accounting policies should be disclosed. If there is any change in the accounting policies, the amount where material facts should be disclosed, where such amount is not ascertainable, the facts should be disclosed. And accounting policies cannot be a remedy wrong or inappropriate treatment. Okay, one thing I want to say, if last year your profit was 6 lakhs and now it is 8 lakhs, and if you have changed the method of valuation, you have to say that profit is increased this year because you have changed your method of closing stock valuation from FIFO to weighted average. I hope all of you know LIFO to hai nahi hai. LIFO we do only in malls when we go to not exactly in malls. To be very frank, when we go to supermarket, especially perishable item, I to do that. If we are picking up bread packet, ना हम पीछे से ही निकाल लेते हैं क्योंकि आज वाला तो कल ही expire हो जाएगा. So that last in first out, I'm cracking a joke so that you remember we have studied in foundation and inter, but now not applicable. I'll discuss more of it in ICDS 2. Right now, let us go to the comparatives of AS1 and ICDS 1, which is asked in exam, straight question for 5 marks or some framework commenting question. AS1 says make provision for all the known liabilities and losses. Provision for repairs, provision for gratuity, provision for this. ICDS says mark to market loss. Mark to market is future losses or expected loss should not be recognized. Same way, anticipated profits are not. Everyone knows. Huh? Anticipated losses are recognized. Prudence. But gain don't recognize. Gain recognize when it comes. That is the same. ICDS is silent on the treatment of anticipated gain, but they will also write down here, not recognize. Don't recognize future gains. Materiality should be considered while selecting and applying accounting policy. You all know what is materiality concept. Huh? Material items should be disclosed separately and all. Concept of materiality is not recognized in ICDS. Sometimes, materiality, like if item is very important, we disclose it separately and we do a different treatment. Here they are not following. Change in accounting policy for 3 reasons. Here change in accounting policy only if there is reasonable cause. Disclosure of the change in accounting policy required in period of change if impact is not material, required in the period of change and also required in the first year in which change has material effect. I mean to say ICDS is clearly saying ki if you have changed from SLM to WDV or if you have changed from FIFO to weighted average, is it going to impact your profit or not? And even your income tax profit. So you have to disclose higher the closing stock, higher the GP, higher the NP. So we have to disclose the impact on profit because of the change in the policies, not only in the year when you change, but later also, one more year, because it's going to impact your comparatives. Okay. So here your ICDS 1 is over. Is my speed fine? Are my examples clear? Some of you are doing it after a gap. If you feel I have given some example but you could not correlate, please ask me to repeat. Put me a message. Chat box is on. All clear? So what is the gist of ICDS? One, you need to remember on your tips without looking at the screen. Here we are following prudence. There we are not following prudence. Here we are following the concept of materiality, especially disclosures and all. For example, materiality का अगर example चाहिए तो loss on sale of machinery and profit on sale of furniture. Do we merge in the books of accounts? Tell me. Furniture ko bech ke you have got profit and plant and machinery have sold its loss. Ma'am, we'll net off. No, you don't. You put separately on the debit side loss on plant and machinery, and this side you put the profit on furniture. That is concept of materiality. In income tax, oh, it is all block of asset. All, ऐसे पूरा rubric बना देते हैं. All the assets with the same rate, they come in the same block and no asset has separate identity. That is all taught in inter block of asset and how we charge depreciation block wise. No depreciation is charged in the year of sale and all that. So that's why they don't follow materiality. Here change the accounting policy for 3 reasons. There change it for a reasonable reason, and disclosure is to be made for 1 additional year if you change the accounting policy. Okay. ICDS 2. I'm telling you, out of all the ICDS, now only ICDS 1, ICDS 2, best chances of getting the problem. And investments related your ICDS 8. These are the ones repeatedly asked for problems. And I've given enough questions at the back when we complete. Chalo. Right now, ICDS 2 is for valuation of inventory. Now, this is not applicable. Valuation of inventory, it's applicable for your stock, your current assets, but it's not applicable for construction contract because we have a separate ICDS for that. Work in progress, which is dealt with other standards. Shares debentures, because we have ICDS 8 for that. Producers, inventory, livestock and all. For this, actually, there is no separate ICDS, but they are just valued at NRV. And machinery, spare parts and all this is discussed in ICDS for your fixed assets, ICDS 5. So for all these, I want all of you to write why ICDS 2 is not applicable to construction contract, because we already have ICDS for construction contract is 3. Any other ICDS. For shares and all, we have ICDS 8. And for this, we have ICDS 5, plant and machinery. So they are not following ICDS 2. Now, when I'm saying for valuation of inventory, for computing your business income, you need to follow ICDS 2. Inventory means what? Inventory means raw material from which you are manufacturing, like leather sheets. Okay? Work in progress is cut out leathers, shoes, if I'm making like that. That is my work in progress, incomplete stock. Ma'am, can we ignore work in progress? Many students, they don't understand. Work in progress is in lakhs of rupees. I remember in my internship, we had done audit of oil mill. You know, from groundnut, they were making refined groundnut oil. So peanuts is raw material. Oil, refined oil packets is finished goods. But there were tons of liters of crude black oil, जिसमें अभी chemical डाल के you had to refine and pack. So can you ignore closing stock of work in progress? No, because huge input cost has gone in that also. Then your finished goods, which is ready to be sold. So for these valuation, you have to follow ICDS 2. Okay? After this ICDS, we'll take a break of 2 minutes. Because कभी-कभी क्या you all solve problems, no? And then I sit and relax. This is little tiring, me speaking like continuously. Okay, but we'll do this one and then we'll take a break. Raw material, work in progress, finished goods. Now, inventory should be valued at cost or NRV, whichever is lower. Oh, ma'am, नींद में से उठा के पूछ लो, हमको मालूम है. From foundation, we know it. In foundation, one chapter is there, inventory. Inventory is a chapter in foundation. In inter, it is like AS2, and in costing also you have it in material chapter. In final, you have index. So see how much repetition is there. And out of the way, rub this all and tell me, as a person, if you have audited the books and if you have done tax audit and fine, closing stock is the only item available in your hand to manipulate little bit the profit. Yes or no? Higher the closing stock, higher the GP, higher the NP, higher the tax. Reduce the closing stock, reduce the GP, reduce the NP, reduce the tax. So, it's very important. Chalo. Inventory should be valued at cost or NRV, whichever is lower. Now for that, what is cost? I will teach you. Dear students, some of you are feeling, if I'm teaching you AS2, I am teaching you AS2. But it is necessary for your NDS and ICDS. Chalo. Cost, though, I will teach you what is going to be the cost of inventory. NRV goes down. You know, when you make cost sheet, NRV is like selling price in the ordinary course, less estimated cost of completion. So, you know, it's like selling price minus the profit, minus the selling expenses. What you get is called as NRV. It's just the realizable market value. So, cost or NRV, whichever is lower. And now what is the cost of our raw material? Can we say, ma'am, raw material, whatever we have purchased is the cost. But when we purchase, we pay GST, custom duty, freight, transport, loading, unloading. So can I say raw material, whatever cost is incurred to bring the inventory in its present location. Factory tak aane ka, all the expense added. This we do it in AS2, in your Ind-AS, in costing material chapter, and now ICDS. Same, copy paste. Cost of purchase, cost of services, cost of conversion. Whenever they use the word cost of conversion, I want all of you to write labor and overhead. What you have put to bring the inventory into. This could be for your finished goods also. Finished goods mein raw material to kharida. You have added labor, you have added overhead, factory, admin, whatever. And now cost of production is ready. Cost of purchase will include duties, taxes, freight inward and all. GST include if ITC not availed. If you already know it and it is a repetition, take it, no problem. GST included in the cost of the purchase. Ma'am, I purchased 1 lakh material and I paid 18,000 GST. So if you have taken input tax credit, don't add it in the cost of purchase. But if you have not taken input tax credit, add it in your cost of the purchase. Am I going fast or these examples are clear and you're scribbling all this? Cost of service shall consist of labor and other cost and all. Okay. Cost of conversion shall be the indirect cost. That you can just write like labor and overhead. These are all the points for reading so that you correlate with your accounts. Other costs shall be cost incurred to bring the inventory into present. Interest and borrowing cost shall never be added to cost of inventory unless it is coming in AS16. What is AS16? Borrowing cost. Sometimes inventory takes more time to get ready. You know, inventory takes like sometimes more than 1 year to get ready. That time can we add the interest cost if it is a qualifying asset and all? Yes, not otherwise. Interest is not added in cost of inventory. What is specifically excluded? All the 4 points. Abnormal loss. You never take abnormal loss. Storage, you know, it's like inventory is ready in your godown. But after that, what you are selling, your selling cost you add only when you sell it, no? So inventory in your godown, you are not adding the storage cost unless it is necessary in the production process prior to further stage. Admin overhead also you will not add and selling cost also. Ma'am, फिर ये खर्चा लगेगा नहीं? Yeah, these are all the expenses incurred when the goods are sold. Right now, 10 packets of oil are ready at 100. But if you sell it, you need to book the orders and also 10 rupees you will add administrative expenses. 12 rupees you will add per packet the selling expenses, delivery dena and auto fare and all that. So this all you add it when you sell it. So what is excluded from cost of inventory? Abnormal cost, storage, administrative and selling. Okay. So are you clear with the flow? We are into ICDS 2. It says inventory should be valued at cost or NRV, whichever is lower. Cost or NRV, whichever is lower. Okay. And now when I say cost or NRV, whichever is lower. So cost we have discussed. And now NRV we all know, I told you. And now for cost, what all methods you will follow. Specific identification method if you have purchased some raw material for this specific order. For example, suppose you are making the invitation cards, right from 100 to 10,000 rupees. Sometimes extraordinary handmade sheets you have purchased for this order. So can you add this specific raw material for this specific order? Yes. FIFO you all know, weighted average you all know. Add one more, no, please, all of you here, fourth method, RSP. RSP. Retail selling price method. This is mostly followed for the retail trade, you can say supermarkets and all. Just let me explain into. In supermarkets, if you just observe one shampoo counter, so many brands, and in each brands, anti-dandruff and this and that. And in each anti-dandruff and all also sizes, 100 ml, 500 ml. How do they take the inventory? They take all the inventory at MRP. They count 10 shampoo bottles of 100, 10 bottles of 500, like that. So you get MRP 100. And then they do markdown. Okay, these shampoos are head and shoulder, no? 20% in the selling price, come karke we are getting. So what is our cost? 80. Parle G biscuit, no? 20 rupees. 2 rupees is our margin. So MRP is 20. Marked down is my margin in the selling price. And then we get the cost. I am telling you how to get the cost in case of retail selling price method followed by supermarkets and malls. Is this clear to all of you? Can some of you respond? My speed is fine. ICDS explanation is over. Ma'am, this is exactly like AS. Fine then. RSP method, what all cost you should. Method of valuation of inventory once adopted, it shall not be changed unless there is a reasonable cost. And you need to disclose which method you are following and all. Now, let us check what is comparatives. Comparatives is valuation of service inventory. There is no specific provision, and for service and all, ICDS is not applicable. Service related inventory means like you're not selling the product, but you are giving service. For example, parlors. But do they have the product, hair coloring, creams and all that? वैसे. Opening stock, no specific provision. Here they say opening stock should be valued at end immediately of the financial year, and if it is commencement of new business, then inventory on the date of commencement will be the opening inventory. Just these are simple points. Change in method only for 3 reasons. Here again for reasonable. This is important highlight. इसको 5 star KitKat सब खिलाओ. Inventory valuation in case of specific cases. You know, when there is a dissolution, in case partnership firm, AOP, BOI, inventory on the date of dissolution shall be valued at NRV, whether or not business is discontinued. 4 बार पढ़ो, बहुत important है. And while computing your business income, they will not say ICDS apply karo and do this add and less. You have to remember. In case of partnership firm, AOP or BOI, inventory on the date of dissolution shall be valued at NRV, whether or not business is continued. Ma'am, but on this date, cost is 18,000 and NRV is say 24,000. So cost or NRV, whichever is lower, this. But when the firm is dissolving, how they are going to value the closing stock? Market value, NRV. Selling price minus all that. Even if it is higher, I want you all to write the example and put a tick here. And tell me, is this point clear or not? Is this clear? What is the point in case of books of accounts? Nothing. Cost or NRV, whichever is lower. But if partnership firm is getting dissolved and you are just doing the valuation of the closing stock of partnership firm, you need to value the closing stock at NRV and not at cost. If I will set the paper, I will pick up this ICDS and ask you MCQ. Literally, that important is this point. Clear? Chalo. Okay, so we have once again, let us recollect what we have done after the break. We have completed with what are all the rules, regulations for ICDS and all. And then we did ICDS 1, which says prudence is not followed, materiality is not followed. ICDS 2, which is exactly like AS2, only when there is a dissolution on partnership firm, ICDS says value the closing stock at NRV only, whether it is cost or NRV, whichever is lower. No, it's NRV. Have you all written this example also? Yes. Now let us go to ICDS 3, construction contract. This ICDS is applicable, ICDS 3 construction contract is applicable when there is contractor, when there is contractee. We study this in costing also, contract costing, and we study this in accounting standards 7 also. So in the books of contractor, how he is going to recognize the income from construction business, because construction activities are very long and the payments come in part. So as in now payments are coming, or when the project is over, no. Income tax Act says construction income should be recognized according to percentage of completion method. Percentage of the completion method. Right. So let us see this comparative, how we are going to do. Construction is a contract for construction of an asset or combination of asset. It's not always land, building and all. Flyover, bridges, roads, dams, सबके लिए ये applicable है. Contract for rendering of service which directly related to construction of the asset, like providing labor and all. Contract for destruction or restoration of the assets. Okay, demolition and then renovating work and all. Construction contract can be fixed contract price. Okay, we will give you 10 lakh rupees and make row houses, or cost plus. Whatever is the cost incurred plus our percentage profit, and this will be cost plus contract. Okay. Now, what is contract revenue? In fact, I feel this is all again same done in AS only. Contract revenue shall be recognized when there is reasonable certainty of its ultimate collection. There also, here also. But please remember one thing, ICDS is talking something about retention money. Now for this, first you all should understand what is retention money. Contractor says he will charge 5 lakh rupees. Contractee is making progressive payments, but 20% of 5 lakh, 1 lakh, contractee will hold. Contractee is saying, I'll pay you 1 lakh only when the whole contract is over. You are completing on time, quality is correct, this. That 1 lakh rupees which is holded is called as retention money. And in accounts, we don't recognize this retention money. But in income tax, this is when you are recognizing contract revenue, it shall comprise of retentions also. So contract price minus contract cost is your contract profit. If you want, write down please. Contract price or contract revenue minus contract cost. This is your contract profit. So they are saying in contract price, include the whole contract price, 5 lakh and not 4 lakh. Ma'am, 1 lakh to abhi mila nahi hai na. Retention money is also a part of the contract money. So retention money are amount which are not paid until the satisfaction and all. Progress billings are amount billed for work performed and all. Variations in the contract work claims and incentive payments, to the extent that it is probable that they will result in revenue and they are capable of being reliably measured. So contract work, you measure it only when it is decided that, okay, you can measure this into percentage. If contract is at initial stage like 25% and all, you will not recognize the contract revenue, even in income tax. What is contract cost? All specific cost attributable to contract, raw material, labor, dumper, diggers, cranes, you got it on rent, interest cost and all. Specific cost, contract related to general cost, ICDS interest and all. These costs shall be reduced by incidental income not being in the nature of interest, dividend or capital gain. So small incomes you can reduce. Costs that cannot be attributable to contract or cannot be allocated shall be excluded. Now, contract revenue and cost with construction should be recognized on percentage of completion method. Highlight this. No other method is allowed in income tax except they say according to percentage. You recognize business income and pay income tax on business income. Next, recognition of revenue and expenses by reference to percentage of completion of contract is referred to as the percentage of completion method. Under this method, contract revenue is matched with contract cost incurred in reaching the stage, and then what I gave you the formula, they will get the profit. Change in estimate. Percentage of completion method is applied on cumulative basis in each year. Like this time 30%. Next time 65% work is over, so 25% additional income. Next time 80% काम हो गया है, तो 15%. So it's like on cumulative basis. If you want to write the examples what I am scribbling, so next time you are reading, ऐसे bouncer नहीं जाना चाहिए. लिख लो, and if you want pause, ask me, I will pause. Cumulative basis in each year to current estimate and contract cost. Where there is change in estimate, the change estimate shall be used in determination of amount of revenue and expenses in the period in which change is made and in subsequent period. ठीक है? Right. Now disclosure requirement. Amount of the contract revenue, method used to determine the percentage, all that you need to disclose. Okay, advance money received and all. I want to talk little bit here about escalation clause. Can someone say in class, if you know a little bit about AS7 and all, you will know what is the escalation clause. क्या है? Anyone knows what is escalation clause in the class? Say, try.
When the cost of material is increasing, that will be added to the agreed cost.
Very good, very good. Escalation clause is change in contract price due to change in cost of raw material. If raw material is increasing, because of market fluctuations, COVID times and all that, हो सकता है raw material prices have gone up. So up to a limit it is fine. But if raw material prices are gone up by more than 20%, then we will increase the contract price also by this much percent. As you solve the problems of this in costing. But what is escalation clause is clear or not? If prices of raw material, labor has become suddenly very expensive, then you will increase the selling price. Now, why we are talking about this in income tax? Escalation clause is increasing your contract price. Is it increasing your income? Your percentage concept will change now? Yes. Then income tax act says escalation clause should be recognized when there is reasonable certain that you will receive this material. So have you written this line? First you write down. I want to dictate these two lines and I want all of you to add it in your material. Escalation clauses change in the contract price due to change in cost of raw material. Next you write down escalation clause is recognized when its realization is reasonably certain. Escalation clause is recognized when its realization is reasonably certain. When it is reasonably certain that you will realize this additional, you had a talk with the contractee and he agreed, okay, if the prices have gone up, I will share it. And then you can recognize it as your income. Definitely escalation clause will change your income. Chalo. So here we complete once again what is the gist of ICDS 3. What is the types of contract? What is contract revenue, cost? How do you recognize? That's fine. Now point of difference, comparative. It's not all the points are different. It is just comparative ki AS is saying aise karo, aise. Sometimes it may be same also. Recognition of contract revenue when it is probably certain, same. When reliably you can measure. Retention money, silent on the treatment. Retention money is required to be considered as a part of contract price. If you know that contract price is 5 lakh and 1 lakh, you're not going to realize now. Still, retention money is a part and you have to recognize as income. Allowability of losses. Losses fully allowable. Oh, this is like super highlight point. In AS7, they say if you know that contract revenue is 10 rupees and contract cost is 11 rupees, 1 rupees is going to be future loss. Abhi only 30% contract is over. Still, you recognize the whole loss. Here, loss is not allowable unless you actually incur. This is aram se karo isko. Account says if losses are there, prudence they follow, no? So recognize the losses as soon as you come to know, even if they are future losses. You are trying to make an apartment in Banjara Hills and itne stones hai ki usko nikalne mein you will spend 1 crore extra. And you have already pre-decided the price, pre-booked and taken the flat ka token money and all. You are going to incur loss. Is this loss incurred or it's going to incur in future? Future. Still you recognize. They say put that loss in your income tax debit side only when it is actually incurred. ICDS on accounting policy also does not permit recognition of foreseeable losses. Prudence, write down. Foreseeable losses book करो, foreseeable income वो सब हम follow नहीं कर रहे. Yes, clear? Contract work in progress. Contract cost which relates to future activity shall be recognized as an asset only if recoverability is probable. Contract cost is to be recognized as an asset. Future cost. Income you will recognize on the stages. Early stage of recognition. Revenue is recognized only when it is recoverable and not. Same way here, 25% they have given. Pre-construction incidental income may be reduced by incidental, that is not contract revenue. Contract cost shall be reduced by incidental income and that is not included. It's like same treatment. If you compare, it is same. So where is ICDS 3 and AS7 differing? Where is it differing? Huh? ICDS 3 and AS7 kahan differ ho rahe hain? So one is escalation clause, another is retention money they are taking, they are silent, and here losses are fully recognized. Here losses are recognized only when incurred. Okay, that's all for ICDS 3. ICDS 4 se chances of getting questions, especially for one part, I'll tell you when I come to that. Before I come to the end of this class, if I miss out, there are some very conceptual questions given for ICDS at the end. They are there in all the materials and scanner. Very simple one-liner question. If you can read and come, it will be very easy for me also. ICDS 4, revenue recognition. There it is like AS 9. Okay. Revenue recognition says, when do you recognize the income? It's all about timings of recognizing the income. So revenue recognition is discussed for 3 things. One is sale of the goods, rendering of the service, and use by others of resources yielding interest, royalty, and dividend. Sale of the goods. Okay. So when you sell the goods, how do you recognize as income? Frankly, 80% of this is exactly like your AS9. So let us talk one by one rather than talking all the three. First, how do you recognize sale of goods? You know, what you have studied in foundation. This is like, I feel very clearly by hearted by the students, you know, when risk, only 1 or 2 points are different and they can frame a question and ask for 2-3 marks. I will take it with example. Listen, rendering, I mean, say, how do you record the sale as income in income tax act when you're following mercantile system? Do you record your sales on due basis? Answer is yes, we do record. Now they say in accounts, sale of the goods are recorded. Three things: risk and reward of ownership is transferred, seller is not having any interest, and there is sure that ultimate collection will be made. You are not having doubt. Then also 1% chances if datas are not realized, bed debt are allowed under section 36 some subsection. Yes or no? Bed debts are allowed subject to the condition. But right now, you are sure that your datas will pick. Can you say, no, no, ma'am, in income tax, recognize sales only when you get money? That is cash method. And ICDs are applicable only if you follow mercantile system. Same thing is applicable in ICDs. ICDS says recognize the sales when you have transferred risk and reward of ownership, when there is no doubt about the ultimate collection, and when the seller does not have any interest. Read it, please, so that I know that for some of you it's like repetition. I will highlight and show you the question. But फिर भी पढ़ो क्यों? Because you have to write 3 hours written exam ना, तो ये point लिखना पड़ेगा आपको. Seller has transferred the property to the buyer. Significant risk and reward of ownership is transferred. Seller does not have any control and there is reasonable certainty it will come. Now, revenue from services. Services, parlor services, teaching services, providing of Swiggy and Ye and Bo services. How do you recognize your income? So generally, service cases recognize the income percentage of completion method. First option. Recognize the income percentage of completion method if the services is for long. Second is, so under this method, the revenue is matched with the cost and all and percentage of completion, 30%, then 65% to next 35, then 80 to next 15 and so on. However, when services are provided by indeterminate number of acts over a period of time, you can do it in SLM basis. For example, if I am giving you coaching of direct taxation for 4 months and I have charged the fees initially, can I take it over 4 months? But if I start my coaching on 1st March 2022 and I have charged 4 months fees from all of you, 1 month I will put it here, 3 months I will put it in the next year. So straight line basis, I want all of you to please give it numbering, straight line basis. And now in bold, I am giving the reason which is different. What is that? Revenue from service contract with duration of not more than 90 days may be recognized when the rendering of services under the contract is completed. Now this is beautiful. If you are rendering service and if the duration is less than 90 days, no need to apportion it over 90 days. Just recognize it when the 90 days are over. Allowed. From service contract, if duration is not more than 90 days, may be recognized when the rendering of the service under the contract is completed or substantially completed. Don't amortize it, just complete it. 1 month here, 2 months there, no. Let 90 days be over in 1st May and 1st May ko recognize kar lo. Clear to all of you, right? So rendering of services is clear. Now, interest. It should accrue on time basis and interest is taxable on due basis also. Interest on refund. It is taxable on receipt basis. When you receive the IT refund, it is taxable in income from other sources. Discount and premium on debt and securities as though it is accruing over a period. You know, when I have issued the bonds at deemed discount bonds, I am giving example at 85 rupees. Deep discount bonds and face value is 100, which you will get after 3 years. Can you recognize 15 rupees as your income over 3 years? Who? Bank has issued the bonds at 85 and after 3 years they are going to give the face value, deep discount bonds. 15 rupees is income for bank. Can they amortize equally over the 3 years? Yes. But generally interest on time basis. For how much period you have taken the loan and all. Royalty and all that depends upon the agreement, authors and books ke case mein. Otherwise you can take rational basis. Dividend, I want all of you to write when right to receive dividend is established. You know, when you get interim dividend, when you receive interim dividend, taxable. Interim dividend taxable in income tax when received. Final dividend when declared. Ma'am, but final dividend is for 21-22. But it is declared in 22 June, no? So 22-23, it will be taxable. You want me to give more example or is this clear? Huh? So like this, once again, just AS 9 or ICDS 4 says Sale of the Goods Act, recognize it, rendering of the services, recognize it in 3 ways, percentage basis or SLM straight. And if it is less than 90 days, let the whole completed contract be over. Dividend, interim dividend when you receive it. Final dividend when right to receive the dividend is established. Disclosures of revenue, what method you have followed, how much is received and all. Now in revenue recognition, if significant uncertainty exists on collectability, then it may be postponed. Revenue to be recognized only if there is reasonable certainty of ultimate collection. Here, revenue recognition to be postponed if there is uncertainty. And here ICDS says recognize the income if you know you are sure you are going to get it. Here proportionate method, completed method. Here mandatory to recognize revenue based on percentage. ICDS requires applicable of ICDS 3 on construction contract. That is why for construction ES9 is not applicable. And disclosure, revenue recognition, which method you have followed. Disclosure for amount not recognized as revenue due to lack of uncertainty and all, you can write. I think enough those for today. ICDS 5 onwards, we will continue tomorrow and then we will take up question and answers also. Read and come for the next class. And if you have any doubts in ICDS 1 to 4, revise and come. Okay. The minute points are very important for business head and others. So I have taken this topic. That's all for today. Thank you so much.